All right. Well, I just went through the entire Nike tray, and I have to do it over because I wasn't set up properly in the recording. Recording doesn't look right. So, um, all right, all right. Zen is in, ready to go. Let's go over this. It's like the spider. It's got it. Let's do this one more time. It's all over again. All right. So Nike is pretty simple. Um, One thing to understand right away is that stocks move sideways before they get going, right? This little sideways action is very, very common in how stocks move, and they can move like this for a while, and they can move like this for not a while. And the reason why they move like this a lot here for a while and not as long here is because of all this stuff. It's open space. And see how it's kind of mirrored on the opposite sides? That's what I like to think about it. And sometimes it's not mirrored. Sometimes it's more due to the mechanics of the trade, as you see with this guy here. Because where was the open space? Well, actually, it was a little bit here and a little bit here, but specifically, that move happens when you break targets. So that is a floor, that is a 24-hour box, and you know that punching back into this is likely going to send you to the 50%. You move past that, you're going to get a new high, and a new high could rocket you through all of that stuff black. So that's why you get such a juicy move there. And I'm sure some sort of news is the thing that did it, but it was all on the chart first and foremost. If we zoom in here, we can find the hourly box that you had to break. It's right there. And now the way I can see that, if anyone is curious, is you see these rejections up here? So many times we say no. We went, and that was our floor, and we did the same thing. We said no, go farther. What happened when you finally broke one of those structures? You know, this is the pattern you're looking for, guys. Looking for this. I don't trade patterns necessarily. It's more than that. But this is how markets move. They move like that. And eventually, these things break. You rocket through the top. Or the floor breaks, and you rocket through the floor. So that's what we're looking for. And obviously, you break this one, you go much farther down. I could even show you how you would find a target. So you know you're breaking below this, right? In this 1 o'clock on the 9th of September 24. You know that you're going farther down. How do I know how much farther to go? Well, the first pocket of resistance you have is this right here. That's right, that. Now, I mark my lower boxes coded. The hourly, which we are on now, is red. The 24 hourly up here is blue. I said 24 hourly, my mistake. 24-hour chart. Um, you can see how perfect lines up floor, ceiling, 50% ceiling. All right, so a great spot, great target would have been that first little bit of resistance. Now you end up getting more. I don't know what it was you bounced on. Probably the same thing you bounced on here, right around there, not exactly. But you reverse and punch back in. That's how you know. Okay, maybe I want to wait a little. I don't want to hold this any longer. That's a good short from here to there. Anyway, let's not get distracted on the lower time frames. This was your entry. Um, I would have gotten in these calls probably when I see them punching back in, checking, and then holding on the floor here. End of day Tuesday. Curious, did Fridays hit? Bang, they did. So those weeklies would have paid a lot. The smarter decision would have been to take 2 weeks out, but often you can take weeklies. And yeah, that's kind of all it is for this is kind of the crappier trade that I wanted to talk about. The good one is how do you catch this? Because this is the actual the big kahuna burger. This John right here. That is a great trade, just waiting to happen for whoever wants to come and grab it. And the people who know how the Potter box works, how that strategy works, how to organize your charts. They're pretty much the only people in the world that can catch that. This is I don't know the exact, I forget, screenshots out there somewhere from the great amount of traders that hit this. 500-600% at least. This could be over 1,000% depending on your average. So let's figure out how you would catch this. Alright. So, like I said earlier, you're looking for that seesaw, right? We're looking for that. That is what we're going to make money off of, is this pattern. And we're going to take smart contracts somewhere in the middle. Alright, so number one, we can see that pretty obviously down here. Now, I often would use this line right here, because that's the top of the candles where they closed. But I'm actually going to take the points of contact with this one. What you want is points of contact more than anything. It matters a lot where this candle opens and where this candle closes, because it's a 24-hour. But right now, I'm taking the points of contact. The reason I'm doing that is because when you move that up to the points of contact, I believe the 50% line looks more accurate. Here, here, here. That's not, we're all getting into the nitty gritty right now, and that doesn't really matter. The main point is you roughly have your box. Right? You could be off by a few hairs, great. So, how the fuck am I gonna make money off this? Two targets. One, remember I color code, so 24 hours blue, and two, right in here. I think I'd go right, yeah, where that candle is. The tops. So those two are triggers. A big old green candle closing up and against that, and you're pretty much guaranteed a move through this open space to this target. And a close above that, and you're going to get a rocket out of here, which we know happens. So those are the two things you've been waiting for. So then to get into that trade at a really low average, you have to find signs on the lower time frames that you're trending towards those higher time frame targets. So we can see that kind of like ceiling thing up here. Let's look in a little more and see what we're working with. Whoa. See that right there? See that business? That is a clear and obvious something or other, right? So I'm going to mark that floor. I'm going to mark that ceiling. And you can see ceiling there, 50%. Keep things clear and obvious. I'm going to move it up just a hair to that 24-hour. Remember the top of our box, the wicks from earlier. And that is the floor, that is 50%, looks great. So what I know is that a close up inside of this floor will get me, in all likelihood, to this 50%. A move off of this 50%, you're guaranteed a new high. A new high past this is somewhere between here and here. And it doesn't take much. The stock's already moving a lot, just a little bit of extra volume, and we're going to close above this. And that'll send us up. So you can kind of get this chain reaction type method. So what is above us? What is above us beyond this? We got another one. See that guy? Floor, ceiling, and holy shit, how does that just line up like that all the time? Now it's a little bit off because I think the ceiling is actually more there. But do you see how perfect this is lining up here? Floor, ceiling, all of those times we said no, 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 no. You just look at it. We literally just say no. We say no. We say no. We say no. All those sellers are just saying, nah, you're not going higher. The buyers are keeping you up. But when that finally breaks, you move past, sellers win, the buyers give up, you dump hard, right down to your 50%. So, excuse me. Now we have it charted out. What the fuck does all that mean? It's not that complicated. It's literally, think of it like chain reactions. So, you know, the Barbenheimer, we call it the chain reaction, blah, blah, blah. But the point here is that a move past this 50%, the move out of any box, all right? So if you have a box, and the stock is going like this, and it's saying no, 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 and then it finally loses. When it's coming back up and it reclaims, it forms back inside, It's called a punchback. And what the punchback says is that in all likelihood, I am now going to, because I just, you can call it displacing all the volume, or you can call it getting the weak hands out, and the diamond hands will hold. I don't really care what you call it. Call it a punchback and understand how it works. The way it works is that you're pretty much guaranteed a new high here because you've lost, you've gained, all these lower averages got in for a bunch of reasons. Displacing sellers, sorry. The point is, once you close back inside of a box right here in that punchback, you're very, very likely, almost guaranteed, a new high past this wall in here, right? And so you can take very good cheap contracts targeting up here if on the left of you is all open space. Because what is open space? This stuff down here where the price created. Remember, this was a wall right here. Sorry to get a little distracted, but see how fast the price fell through when it left that box? It created open space. Then it created a wall to keep it from going into that space. And when that wall broke on a lot of volume in the morning, you flew through open space. When you lost it and rejected something, what did you reject? You rejected this floor right here. Over here, the 1, 2. We reject it and we say we can't hold that. So then we go back through the open space. All right, so that is a huge part of this whole thing, is open space and understanding. We want to take contracts up through open space or down through open space because we want the price to move really fast in our direction. It creates the implied volatility, it makes your contracts go up. And then here's something I love that the guy who teaches always says, Potterstocks. You sell your contracts to the dorks. Because the dorks see the overpriced contracts and they're like, oh, maybe it'll gain more. That's what we want. We want the dorks to buy our contracts. We're going to sell it to the dorks. And so let me delete all of this and show you that when we close above this 50%, we're going to make a new high. That new high, remember, the new high is according to this and this because it's that box. So a new high out of there will likely get you, oh wait, well, where will it guarantee you already? I break past this box is 50%. So if we're getting a new high from here out, if it just breaks this 24-hour, all those things are lining up, and it breaks, we're already going past this box. So we're pretty much guaranteed now another one. So that chain reaction sent you to this chain reaction, which then sends you up here. And what's up here? Tiny little wall and open space, which if you're already moving pretty fast to that volume, you're going to break this top one easily, and then you can have a huge amount of open space. So we're looking for those chain reactions on the chart, and then we're waiting. So now I am actually going to move this over so we can see it when it happens. So you're just waiting. You're waiting for an entry. You're seeing this kind of slight trending up seesaw action. We like to use these channels to get an idea of what we're trading through. And then we're waiting. We're sitting around and we're waiting. We're looking for how cheap the contracts are. We're just setting alerts. You can go up here and you can I can have an alert set right on here. So if I do nothing and just wait for my computer to go ding and let me know that it went past my little mechanical level, then I'll take a little chance. So it goes past my mechanical level. It claimed the ceiling. It claimed the floor. Sorry. This floor over here, we claimed it. We got inside. And then we sold off. So I'm waiting. I'm seeing these contracts are super cheap down here. It's 2 o'clock. End of the day, we're trending back up. Trending back up towards that ceiling. The trend says we go higher. It's not much, but it's a pretty clear uptrend that we're trending towards my target here. So it looks like we're going to hit it. We hit it, we lose it. We're getting right towards it by the end of the day. And if you look at contracts, and remember this is Monday, you got a whole week of trading. You know that we're right below all these chain reactions, which could send us flying. And then if we send us flying, we're going to go flying through that open space. On this type of pattern, it would look like one of these big guys. But what's cool is you could even hedge and be pretty well off no matter what happens. Because you could take big contracts up here, low contracts up here, cheap in both directions. And I often will favor a direction. Like this chart, I would definitely favor all of the chain reactions to the upside, but anything can happen in markets. You know, Trump could open his mouth and say, uh, Nike is gay. We're giving them 200% tariff. You know, whatever it is, and you can be fine if you properly hedge because you know that on this seesaw motion right here, see the seesaw, the up and down, up and down, up and down. You know that something is about to happen right here. You know, this is the same exact pattern we have on there, we have down here. And again, I'm no pattern trader, but what I would do is I would take, say, 400 bucks. I would look at these contracts up here, maybe these 79, whatever, maybe 79, maybe 78s, and they're going to be like cheap as hell, like 5, $6. Okay, you could buy 100 of them for 500, and then put 100 bucks on very cheap, equally cheap puts down here at the floor, 69 or 68, something like that. And so you're pretty safe. You've hedged yourself if Trump decides to call Nike gay. But also, you've set yourself up to make insane money when the chain reaction breaks, when all that tension breaks. That's exactly what happens. So, not a bad shot to take them here Monday. I think you have every reason to take them there Monday. And then something really cool happens the next day when the market opens. Oh my goodness. So, could you have gotten in on this day? Yeah. You could have set your alerts and said, holy crap, we gapped up overnight and now we're opening above the 50%. We've broken our target and now we're opening above the spot I said the chain reaction begins, the 50%, the cost basis. So that's a guaranteed, oh, we are moving from here to here and we're making a new high past here, which guarantees our chain reaction here, sending us here. And then all that volume can just, things can get really crazy, especially when it's a news event. And all of a sudden, wow, I've made ridiculous money. I mean, if you got them, let's say $5 and you had 100 of them and you had, you know, 78, 79s, I mean, they're going to be worth a good amount of money. They're not going to be in the money yet, but literally on Tuesday, those contracts have gone from nothing to like bare minimum. If they went to like $30, which I think is very conservative, it could be way more than that. Giving you 4 days till expiration, flew so fast. I mean, you're already making what, 600%? You know, you're taking a 500 and making 600% on it. Like, that's amazing. Sell fucking. At this point, I would sell 70 of them. But the reason why I would keep some is because you always hold runners, and we know that there's even more open space above us. There's no resistance here. There's not really anything to chart, figure out where. Like, I could maybe say kind of a ceiling there. There's a little something here. There's not really anything to go off of. And so if that's my target, hold runners. It's the little bit of resistance I can find. You sell most for incredible gains. You wait for the next day. Pretty much hold. You come down a little bit. Doesn't matter. You've already made great money. You're just holding. And wow. Holy crap. Overnight, some news. Morning. This is when we do what Potter says is selling your contracts. Dorks. You know, doesn't look like the greatest time to take it right in the morning. He likes to sell his contracts right in the morning. But I believe on this trade you could have even held, you saw this kind of a little bit of structure forming there, right? You can see the ceiling. That is the floor, that there. 50%. See that you're holding up here at the the end of the day. I mean, you could have held till Friday reasonably on the. You could have taken some more profit because you have a lot of move here. Probably should take some profit, and then screw it. Hold till Friday. Hold some more runners, and yeah, you kill it. I mean, you end up at like $81, $82 Friday morning. That would be well over 1,000%. Just an all-around great trade. And the things you utilize to get into this trade are very simply chain reactions on these lower time frames. Propelled you up through the open space. And to be clear, it starts on this higher time frame. It starts down here. Okay, it starts seeing this box and saying we're moving or holding above the 50, we're trending up. That's what allows you to go through all this. But it's simply just charting it out, figuring out the levels, figuring out where you would take your odds, figuring out where those chain reactions are going to be that are going to propel you in the direction you want to go. And then you have to take a chance. You have to. I mean, it's just too likely for you to not have money on the line. That's how you make a bag. It's the first one. We'll do many more, but felt Nike was a great opportunity to show how mechanical this could be.